It's big, it's beautiful, it's a bill, and it's back. And in this video, we are talking about Trump's big, beautiful bill and what it means to you as a real estate investor or a business owner. I've spent over 72 hours researching over the past several weeks, and I've even read the actual bill. And I've boiled it down to the most important things that I think that you need to know as a real estate investor or business owner. But before we get into a breakdown, I want to remind you that this bill has not been passed yet. In fact, we've gone on a roller coaster of emotion because last week it was progressing and then it wasn't, and then it was again. And so who knows what's going to happen? But I want you to know exactly what it means. So let's jump in. If you remember, Trump made a lot of bold claims while he was on the campaign trail about what he was going to do about taxes. And apparently he's making good on his promises. But before we talk about what this means for you as a real estate investor and business owner, I think it makes sense that we talk about what does this mean just for you personally. The individual side is way beyond the scope of this video, but if you're interested in getting a full breakdown and my notes on everything that I've discovered after researching the big, beautiful bill, please click the link below and subscribe to my newsletter and I'll send you that report. But I just want to give some key highlights. What does this mean for you as an individual? So with the BBB, and that's what we'll call it from here on out, Trump is proposing specifically for individuals a permanent reduction in tax rate. That tax rate was introduced in 2017 during the TCJA, or the Tax Cut and Jobs Act. And I remember being a young accountant and how much that bill completely changed the way we did things. Well, that same legislation is set to expire. And one of the things that was set to expire was the previous reduction in tax rates for individuals. Well, what he's looking to do is make those tax rate deductions permanent. He's also looking to increase the child tax credit from $2,000 to $2,500. This is a new one for this bill. It's an exclusion of tips and overtime pay from taxation, as well as Social Security wages. Now, for the exclusion on tips and overtime pay, the threshold on income is $160,000. That covers a large portion of the American population. And so a lot of people could potentially benefit from this. The other thing was the Social Security benefits that seniors receive who are 65 and older. Now, originally he was trying to completely cut the taxes on Social Security income, but instead the BBB is proposing a $4,000 deduction for those seniors to offset taxes on Social Security. This is a new one, and I can't tell you how many times I've had clients ask me about this. You will be able to deduct your interest on your car. Now, there's a caveat. The car does have to be made in the US, and there are some additional stipulations, but that'd be really cool to be able to deduct the interest on your car note. And finally, this affects professionals just like myself. He's looking to do away with the IRS free file program. I don't necessarily know how I feel about that, but it is interesting to see that he wants to have professionals filing on behalf of individuals or having them use commercial tax software as opposed to having individuals file themselves. Now, part of the reason why I don't want to get into all the individual stuff is because, well, we're all individuals and individuals are different. And so every single one of these changes that impact an individual are going to impact you differently. And so we can't necessarily get into the nuances of this, but I did want to make you aware of what these changes were that were coming down the pike. Now, let's talk about what does this mean for business owners and real estate investors. The number one question that everybody wants to know is 100% bonus back? You gotta wait for that. Let's talk about some other things, and I promise I will tell you at the end of this video whether or not there is bonus. But I do want to touch on some other things because I think they've gotten overshadowed as people have been talking about what the BBB is all about. So number one, I want to talk about something called the qualified business income deduction. If you remember, back in 2017, this was again introduced under the TCJA, and what it allowed was for small business owners and businesses up to a certain level to take a deduction of 20% of their income as a deduction. And this deduction, how many times can I say deduction in a sentence? But this deduction was set to expire at the end of 2025. Well, the BBB is looking to not only make it permanent, and get this, instead of it being 20%, he's looking to raise the deduction to 23%. I think this is pretty cool. And I think the people who need to look out for this are not just business owners, but if you are a real estate professional and you claim the real estate entrepreneur, the rep status, this is especially key for you to know, because you will be able to take an increased amount of QBI deduction against your rental income. Now, let's talk about opportunity zones. This was the second thing that was set to expire, not in 2025, it was actually set to expire in 2026. And opportunity zones are essentially designated areas in each of the 50 states that are lower income, lower served jurisdictions. They are identified, and if you invested in those areas, you were able to defer and potentially eliminate capital gains. If you remember Nipsey Hussle, rest in peace, that's actually what he was doing in his hometown of Compton. Now, as I stated previously, these OZs or opportunity zones were set to expire at the end of 2026. Well, the BBB is looking to expand and identify new opportunity zones until 2033, which gives a lot of individuals who are selling, cashing out on deals that they acquired during the COVID era. It gives them another place to put their capital gains besides just 1031ing. I think that this is a really, really good opportunity. Now, if you're a real estate investor who's just getting started and you don't have any capital gains to invest in an opportunity zone, I don't want you to feel like you're missing out. Here's why. You're able to take advantage of other types of investments. So if you started a business, you may be able to get some type of credit in an opportunity zone if you are producing jobs or some other things in that area. The other thing is, when there's opportunity zones, states are also offering rebates and discounts and other incentives to get you to bring business and opportunities to these communities. So this may be an opportunity for you to consider a new build, to do a flip. Even if you don't receive a direct benefit from the opportunity zone, you can receive a secondhand benefit by just being in the right place at the right time. Before we address the elephant in the room about bonus depreciation, I do just want to bring to your attention some honorable mentions that I think are really, really beneficial for you to know. So expanded R&D, or the research and development credit, is normally used in the tech space. If you know somebody who is in tech or manufacturing, you would have heard this. Well, it's expanded to now allow for construction of factories. So if you're into development, if you're into construction, I would highly recommend that you look into the research and development credit to see how you can potentially use this as something to your benefit. The second honorable mention is expanded Section 179. So under the current legislation, the limit is 1.25 million and the phase out is 3.13 million. Well, under the BBB, the new proposed rate limit is 2.5 million and the phase out is 4 million, which is another awesome incentive. Under the BBB, Trump is looking to permanently extend and increase the estate tax limitation. So under the current legislation, you are limited to 13.9, basically $14 million in estate value that is exempt from estate tax. Well, he is looking to extend that to 15 million as a single filer and 30 million as a married couple. And he wants to do it permanently. So what does that mean for you as a real estate investor? It is very possible, as you are investing and purchasing properties and investing in real estate, the intention is to build your wealth. And a lot of times when I'm talking to the clients, they want to build generational wealth. Well, generational wealth means that we're not saving hundreds, but we are saving millions of dollars in cash and assets and passing that on to the next generation. Well, with estate tax, that Uncle Sam also gets their portion, and we don't want that to happen. So this incentive or this increase in the estate tax limitation, I think, is a really good opportunity. I hear you. There's people out there who are going to say, well, this only benefits the 1%, but we're not talking about 1%, 1%ers here. I just recently saw on LinkedIn a group of young professionals who invested in a $90 million property. And just like that, they have now exceeded the estate tax limitation, and they're not even anywhere near retirement age. So it's not just for the top 1%. There are opportunities being made every single day. And so I think adding this to the legislation is a really good thing. Now, the moment that you've all been waiting for, is bonus depreciation coming back? The answer is yes, the bonus depreciation is coming back. It is going to be 100% and is going to extend out until January 1st of 2029. So if you purchase any assets after January 19th of 2025 until December 31st of 2028, it will be eligible for 100% bonus as long as it meets the standards for that. Well, that's everything that I think that you should know about the BBB. I'm excited to see how this plays out because in all actuality, none of this could happen and we could have just wasted our time. But I don't think that we will. Nevertheless, we will keep you updated on how this progresses. If you like videos on tax strategy related to real estate or business, I think you'll like this video.